My name is Nicolas Firzli. I'm the founder and director general of the World Pensions Council, which, to make a long story short, is an international think tank and industry group. So what do we do? We're a platform, I guess, for mostly pension fund board members, trustees, and other board members of long-term asset owning institutions. And we do essentially, research and advocacy, promoting, defending the interests of long-term asset owners and their boards. And we look at, what we call in French, excuse my French, the bloody crossroads, or the intersection, where on the one hand, long-term assets, financial markets, and on the other hand, policy making, law, regulation intersect. We're very much interested by that intersection between financial markets across geographies and asset classes, and policy making, policy thinking, law making. We think it's a very interesting place to be to do advocacy and research work. We're firm believers in that notion, the correlation, if you will, between long-term asset ownership, long-term investment, and what we call, the innovation ethos. What does it mean, the innovation ethos? We borrowed that term from a great French-American or Franco-American thinker called General Georges Doriot. He's the founder of the Harvard Business School Department of Private Equity and Venture Capital. He actually invented the term venture capital, and is also one of the co-founders of what we call today the Silicon Valley, and he's also a former military planner for the Pentagon in Washington, D.C., to be precise, near Washington, D.C. And he had three offices, one at the Pentagon, one at Harvard University near Boston, and the other one in what we call today the Silicon Valley near San Francisco. And to make a long story short, he invented the term venture capital. And you have the word venture, which comes from Angevine English, adventure. And so for him, what he meant by that, he meant creative capital, innovative capital. So the idea is to innovate. It takes a long time. Usually it takes longer than your average holding period for a bond or a stock. People, investors, pension funds, typically they will own a bond for 1 or 2 years. They will own an equity, a listed stock, a share for 2 or 3 years. But we're talking here about 10, 15 years of holding period for these innovative investments. And so Doriot, and I think rightly so, he insisted on the long-term nature. So he said, basically, to innovate properly, we need sticky money. We need faithful capital. We need creative capital, which will accompany, that's a very important idea, will accompany entrepreneurs throughout that 7, 10, 12 years cycle, where, the first 4, 5, 6 years could be a bit ingrate. It's like Saint John the Baptist preaching in the desert. The first 4 or 5 years for a startup, for a tech startup, usually cash flows are negative. You're burning cash. And so you need to be faithful. You need to make a leap of faith to join that club of creative capitalists. Really understand the risks, the liquidity, the financial risks, the loss of money risk, which are there, of course, and be willing to accompany entrepreneurs not only with your money, but also to accompany the founders and the entrepreneurs with your advice, with your ideas, with your mentoring. And that's the meaning, of long-term capital, which is needed for that, startup ethos or startup environment or ecosystem to exist. So we really believe that long-term asset owners, sovereign funds, endowments, and pension funds are playing, and they will play an even bigger role in the future, especially that in that future we're entering now with the financial crisis and the shrinking balance sheets of European, British, and Silicon Valley banks. All the more long-term, creators, innovators, they will need to knock on the door of pension funds and sovereign funds more than banks for their long-term financing. I disagree. I don't think that it's all gloom and doom for Britain. And so unlike the majority of experts or economists today, I don't think that post-Brexit, the British economy will be a loser, just like the North Korean or Russian economy. I think it's not true. I think people are obsessed by short-term GDP figures. And of course, this year, in the year 2023, the macro GDP growth prospects of Britain, they don't look good. It's true. So you could say in the very short term, Britain is suffering, but I don't think it's all gloom and doom. On the contrary, I think that the UK economy is equipped intellectually and financially to surmount these short, medium-term hurdles. And I think the medium, long-term growth prospects of the UK economy are actually much higher than the EU average, much bigger than the French, German, Dutch average. Why? One of the main reasons is pension assets. Britain is a pension superpower. Britain has 5-6 trillions or more of pension and insurance assets. Post-Brexit, the only pension superpower left in the European Union is Holland. But most of the other EU member states are actually tiny in terms of pension resources, pension money. And like I said earlier, in that post-crisis era where the balance sheets of European banks are shrinking, and it's not only Deutsche Bank or Silicon Valley Bank, for many reasons, the balance sheets of European banks across the board will shrink further in the coming quarters. Entrepreneurs, innovators, they will need more than ever before pension money. And where will they find a lot of pension money in Europe? Well, in London. So really, because Britain is a long-term, pension superpower, because it has much more assets. You have to understand, today, pension assets in Britain, they represent roughly 90% of the size of the UK economy. On average, in France, Germany, Italy, pension assets today represents 8 or 9% of GDP. So it shows you the gap which favors Britain. And I think, something happened at the end of October, early November. So 5 months ago, there was a change of guard in London, in Westminster. 5 months ago, you had a new policy team, which basically took over. Rishi Sunak, of course, and Jeremy Hunt, I think more importantly even the Chancellor, Jeremy Hunt. And I think these guys are super smart city executives, former city intellectuals, and they understand the meaning of having that huge untapped, pile of pension money that can be harnessed to help, Britain to grow and prosper and innovate in the future. And of course, I look forward to joining you guys in London next month for the Innovation Zero Summit, which just read, the agenda earlier today, has a stunning group of policy thinkers and large venture capital and asset management investors from all across Britain and the world. I really look forward to joining you guys once again, in Britain, in London next month at the Innovation Zero Summit. It's an impressive roster of, ministers, policymakers, policy thinkers from across Europe, North America, and emerging markets. And of course, the world's largest private equity and venture capital funds will be there at the Innovation Zero Summit in London. And so I really, really hope to exchange ideas with them and bring to the table, our perspective, which is really the perspective of LPs, asset owners, and interact with the attendees and speakers at the Innovation Zero Summit in London. Key message is, don't be disturbed by short-term market volatility. Don't let yourself be dragged down by flipping through the pages of, the financial press every day. If you are a long-term investor, really think long-term and act long-term and invest long-term. And these are, these innovative assets, creative capital, are long-term bets. So, to use a famous, metaphor, doing that kind of investment, it's like a painter, an artist, watching paint dry. That should be your ethos, watching paint dry, choose where you put the dots, choose how you frame your tableau, but don't be in a hurry to invest. Take your time before betting on a particular entrepreneur. And once you do it, like I said, do it for the long haul. Don't let yourself be disturbed by these short-term, market blips. And once again, I do believe that London will remain, I'm French, but I'm trying to be here intellectually fair. I do believe that post-Brexit, London will remain by far the financial capital of Europe. And I think it will keep on attracting money from German, Swiss, French institutional investors. It will keep on attracting talent from neighboring European countries, including Ireland, France, and a lot of Asian, Australian, and Middle Eastern, Arabian Gulf money will flow into UK, British-based, entrepreneur-driven companies in the coming quarters. I have absolutely no doubt about that.